Hey folks, I'm going to say this plain. We are standing at the edge of what could be one of the biggest small cap rallies in decades, and most investors aren't even looking. Since the 2022 bear market ended, large caps have been sprinting ahead, and small caps have been left gasping for air. That gap, it's about to close. Fast. Let's talk numbers. The S&P 500 is up almost 80% off its 2022 lows. The Russell 2000 up only about 32%, still stuck below its 2021 highs. That's not just underperformance, that's historic underperformance. We've been living in a split personality economy. Mega cap tech, no recession, small caps, they've been in one since 2022. Sales down, earnings down, CEO confidence down, employment down. Four strikes. And it lines up with every small business recession in the history books. So why the pain? Look at the Fed's playbook. They tightened hard even after inflation started falling, a record-long yield curve inversion. Money supply had been shrinking for 15 straight months. Real rates are sky high. For large companies with fortress balance sheets, annoying but survivable. For small caps that depend on cyclical growth and credit-sensitive financing, it's like the Fed's been stomping on their throat. Here's the part Wall Street is ignoring. Small cap relative performance is one of the most Fed-sensitive trades out there. Go back through history. When the Fed pivots to easing, small caps don't just rise, they rip. Why? Lower short and long-term rates make financing cheaper. A steeper yield curve signals healthier credit markets. More money supply growth means liquidity flows again. And a softer dollar boosts export-heavy small firms. In past cycles, these conditions have sparked multi-year outperformance from small caps over large caps. We're getting close. The Fed won't hold these restrictive conditions forever. At some point, they'll have to cut, ease liquidity, and let the curve steepen. And when that happens, the structural headwinds holding small caps down flip into tailwinds overnight. That's when the performance gap starts to close, and the catch-up rally can be sudden and brutal. If you're waiting for the Wall Street Journal headline to tell you small caps rally 10% in a week, you're already late. This is why you don't wait for the pivot, you prepare for it. That means building your small cap shopping list now. Look for high-quality businesses with strong balance sheets, durable cash flows, and room to grow when credit loosens. You want wealth? Own great businesses. And when small caps get their wake-up call, you'll want to be holding the best of them, not chasing after them. Most investors are staring at the same handful of mega cap names. That's fine, until the market broadens out and the real money is made in the names no one's talking about today. So start your list, stay disciplined, and be ready to move when the Fed's foot finally comes off the neck of small caps. If you want to see the small cap names I'm watching, hit the subscribe button, drop a comment, and we'll walk through them together. The wake-up call is coming. Will you be ready?